Good afternoon, everybody. This is Dan Hussey with ElliotWaveForecast.com bringing you our London session recap of our live scalping trading room. It is currently 11 a.m. Central Standard Time, 12 p.m. Eastern. That's 5 p.m. Greenwich. And it is November 14th, 2013. So let's begin actually with reviewing let's begin by reviewing the S&P 500 and what we did with it today. Pull this off. So going into today, we knew that we were, there we go, from a 4-hour perspective, we knew we were holding the extension long drawn from a 1705 anchor to highs. The 1740s traded the long, and we are really getting close to upside targets here at 1790s. They, you might be willing to find somebody like myself to consider those having traded. Going down to a 15-minute chart, however, inside of this anchor, the market broke a full short and then pulled back into a full halfway back long yesterday. I missed being filled at a 1754. It was the low of a 1754 quarter. I know some of you got into that trade, and congratulations, it was an excellent trade. We went to and through technical targets on this trade, and this morning, with a gap fill at a 1778 quarter, that's important, drawing the extension from highs to highs then for this morning, gave us the setup that we took into today's trading session. It was a 1778 quarter buy aligned with the gap fill for a 1788.75 target. We front run that target by 2 ticks. So the target was literally at a 17, our orders were 1788 quarter. Okay? Absolute beautiful trade at the open. It took about a half hour, 45 minutes to get going, but then it was straight up till targets. Couldn't have asked for a better extension. The market has now blown out of targets and hit its next in the series of upside targets. So now we're looking for same anchor new high to the 1788 or 1788.50 highs for the next in the series long. The 1788 halves, which occurred right about 10:24, 10:23 this morning, also happened to be the high in the tick. Occurred at the exact same time. So this has technically a high probability for the 1788 halves to be a short-term top, at least until we find support. Basically the market was bid up, found resistance. You had a ton of buyers in the highs, and now they're getting squeezed. And now the market's going to sell off to find support. We're looking, and we have orders in to buy the 1780 support against a 1777 stop, looking for 1790 upside targets. Of course, we'll look to take half off at +3, but that looks like the next in the series extension long setup, and I was in the first one. I'm going to take it in the second one too. So that's what I'm looking at in the S&P right now. Again, just continuation. We're going to continue to watch and assume that the trend continues higher until it fails and reverses for us. And at this point, there are a 4-hour, 15-minute trend that is taking us higher, not including the daily and the weekly and the monthly that are also taking us higher. The monthly is taking us all the way up to 1950, so keep that in mind. I know we've looked at a lot of analysis that says at some point here the market's going to find a top and do that nice big pullback. Just not yet. Okay, we're day traders. We're trading the trend until it fails, and that's all you need to worry yourself with. All right, let's take a look at gold next. Gold has been highly technical today. After breaking the extensions we are monitoring that took us down into lows, they eventually failed. And before their technical failure, gold had actually started its series of longs off lows. So we had one to target, entry lows to target highs, traded again today to target. And then actually you have to go down to a 1-minute chart to see the next in the series, but entry lows to target highs has already traded. It happened within, I'd say 8 minutes of hitting targets. The long traded again, but this is precisely why I don't trade gold. This is a $10 move, and in that time period, that's a huge move. So Nevertheless, going back out to our hourly chart, we're looking for that relief rally into the 1310s, which is where we see the next opportunity to be a seller of gold. The market could pull into full halfway back longs, as it usually does at a 1277 half. So I'm not saying be a net a buyer, but right now the swing down off of our right now the swing down off of the 1361s is done, and gold has found support and has reversed its trend in a series of longs off the lows. So again, looking for gold up into the 1311 upside targets. And again, it's now stair stepping higher in the series of longs that could take it up and into that level. So that's pretty much all there is about gold right now. For gold, let's take a look at the 10-year. Aussie Yen futures have rallied again up into their overnight last night. This is something that's important to me, is that this entire rally was basically not reflected in the dollar yen. The 10-year has rallied up into its full short. You can see the 50% short here trading. We have technical downside targets below us, and this is of course the first short after the full halfway back short for the year has traded. And this whole rally over the last 24 hours has not been reflected in the dollar yen. The dollar yen still sitting up at highs and actually completely inverted for the last 24 hours compared to the 10-year. So the yen typically leads it. It's the bigger, thicker market. But the 10-year is a slow boat. It's usually very slow to start its moves, and but when it finally does, it can accelerate very quickly. But for the time being, all we have now is 2 tests of this level and a failure to break through it so far. So I'm not saying that the 10-year is going to fall like a rock immediately. It still clearly has a bid in this marketplace. That bid could be justified by this extension. So we're going to monitor this trade, monitor this resistance level, and of course we're still anticipating continued downside as we come off of this major top. And not that I'm this type of trader, but a lot of people trade head and shoulders, and you have a pretty clear head and shoulders pattern forming right now. Left shoulder, head, right shoulder, and right into this 50%. And it's not something I ignore. A neckline down here between 125 spot 245 and 125. I'd say spot 150. That's going to be an accelerant, and obviously that's just those stops lurking below this low now would get run in that event. So it's not rocket science to see. There is some technical prowess. I don't trade head and shoulders. I would trade this 50 halfway back that, by the way, has already gotten its first target if you're a seller on it. So, that's good to see the algos sold it, got their fill. Market's trying to jam it up and shake some weaker accounts out, I'm sure, but this is the type of market that will just halt price action at a certain point and then finally just turn around and go. So, lots of mixed signals from the U.S. dollar in general. Like when you look at the Aussie, the Euro, and the Pound, here's a great kind of example of exactly what I mean. Like clearly one of the strongest currencies today is the dollar against the yen. I mean, they're all pretty strong, but look, what the weakest is the pound. The pound is the strongest against everything, and you have kind of an upside down chart here. The dollar is actually a lot of stuff is down against the dollar today. In other words, there's some dollar strength against the yen, the Aussie, the Kiwi, and the CAD. So our commodity currencies right now are all down against the dollar, whereas the rest are relatively flat, no change. But then the pound, for whatever reason, is just really strong right now, and you can see that it's the clear breadwinner. And if I just switch to British pound here, I mean it's up against everything. Everything is down against the pound right now. Nevertheless, I feel comfortable with where I am. Mixed signals in the U.S. dollar. Yen is pretty clear, and that's why the bonds, got to keep an eye on bonds. Got to keep an eye on bonds. So, just watching that there. All right. Take a a look at our US dollar crosses now. I'll begin with the euro. Kind of been the same old story that we've been telling every day. The only difference is that this looks like the 7th swing up off of these lows, and it could be terminal. And this also could be truncation of the 7th swing. In other words, we've a technical failure of it. I'm not calling that out yet, but we are technically, up and into our resistance zone for the euro. And it, our reverse engineered extension that held before, same anchor, new low, is holding again here in equal legs up. I find it very hard to be a buyer of the euro just yet, unless you're long from 133s and you got your first targets filled, because this is, again, this is a very technical full halfway back long. The question is, are we going to make a new low and dip below? And if you actually do some analysis on this swing down, there are some signs still pointing to one little leg lower. Okay, I will not deny that. But technically, the algos, we have filled the long. So this is where you wanted to be long. It might go against you, but you should be taking your first targets if you are long from that 133 handle. I can't stress that enough, because there could be a dip down here, and it still can remain a totally valid setup. We'll see what happens. Any dip down into this level, I'm looking to be a buyer on a nice reversal setup on the euro for that swing to 141s that we've been ever so patiently waiting for. Okay, patience is a virtue in this market, and it often rewards us if we are patient enough. So, while we're below 135.20s, that's my line in the sand right now. Below 135.20 to 135.40, the euro does have the potential to make a new low. Okay. Mark, I'll answer that question in just a second. All right, so definitely seeing lack of motivation for the euro to really head higher here. Each swing up has been losing momentum, and this could be, the market starting to roll here. And judging what we're seeing in some other US dollar crosses, like the Aussie US dollar, it has traded into a full short off of today's high. So, not that we trade the euro based on the Aussie US dollar, but I can't deny the fact that we've traded this full ambush short today at the 93.35 level. And that does have technical downside targets of the 92.56s. Again, we had to reverse engineer the resistance that we came down off these highs, but if you want to break it down, we're not holding along off the lows here. Okay. And going out to a 4-hour chart, we know that this 93 level is the beginning of our support zone, extends all the way down to 92s. Equal legs, 3 equal legs down would be down to 92 in the Aussie US dollar. So, of course, it could still be holding these 93s, this big major long, and that's still where the support is. But I'd like to see some resolution here. Like, I'd like to see a solid break and then us start to hold longs to say, okay, now we're ready for the swing up from 93s. It's very similar to the euro. They're both at their major levels. We could get, this market could dip in against them. Okay, but one thing I am watching in conjunction with the Aussie US dollar, and in the short term, seeing this short hold here, is the Aussie Yen. And the Aussie Yen has been one of our weakest currencies. It has, from a daily perspective, I'm still an Aussie Yen bull while we're above an 85. I think we're heading up to 108s or 113s, but it's going to be a long time coming. And I don't see any full halfway back long that happened after we got the 87.64s fill. And this is kind of what I'm referring to, is like this major level. This is a huge level at the 89s that traded, and then it dipped in and then finally got the reaction off of it. So we could see similar price action in the euro and the Aussie, have it still be in this big swing long and heading higher. It's just a matter of time for it to get its legs. Okay. So going back down to a 4-hour chart, I want to see what happens in the Aussie Yen down at 91s, and we are far from that figure. We're 200 pips away. So that either means dollar yen weakness or Aussie US dollar weakness for this to come down. I do see in the short term full short having held here, off of this swing high to low. That's the 96 or 95.70 to 92.70 here. It's 94.20 held, and we have downside target still. And then inside this level, we just held a full short again. So and we're held a second test of it on this last pop higher. We are holding this long, but it came after 2 shorts, and that's dangerous for either side. So in conjunction with the Aussie US dollar having traded its full short and the Aussie Yen having traded a second time its full short, this full short, kind of swing short, seeing a lot of mixed signals, and it's going to be interesting to see what happens in the near term for the Aussie in general. Okay, like I said, the pound has been really, really strong, and what we're seeing is it got a little bit of a reaction from this short, which we're going to put on watch now. If you wanted to be short the pound, it gave you the opportunity. It gave you the opportunity to be short and free. But unfortunately, the pound off of its lows here is actually being incredibly technical. It's holding, held full halfway back shorts to targets. The next in the series, basically where yesterday's Globex long traded. I meant longs, not shorts. Globex long traded entry to target, filled, target hit. Next in the series now on the pound. Just stair-stepping higher is now, we're looking for support at the 106.45s below the 106.30s. Look for that full halfway back long. I'd like to personally see a push above the 161 level before I would commit to buying a pullback. But again, this is just the pound having been in this larger range. Dipped down, completed a 3-wave sequence down in a double flat, ABC, ABC, ABC. Whoop. A double flat being with two 3-wave moves and a nice B wave. So we'll see what happens from here in the pound, but definitely continued upside. In the short term, there might be that pullback, which gives it short-term weakness, but ultimately we're looking higher in the pound. Okay, and that is pretty apparent when you look at what the what the pound has done, and that was a beautiful 3 waves down in the pound. Down into, sorry, I forgot to mention our big 4-hour extension long level. So drawn from the 55.75s, anchor to highs here. It gave you 3 instances to be long that big swing trade higher, but we'll see what happens. I'd like to see it break the 161s and then give that pullback. But this is looking like, just on a 4-hour here, this looks like 5 waves up. Break it down in a to smaller time frames. It gets a little tougher to count. But you can justify a 5-wave move here, and the start of maybe an impulse higher. I don't trade the pound as often. It's just never, it has never treated me well. I almost always get shaken out, and the pound has a tendency to do nothing and then just move as well. So it's pretty illiquid, do nothing and then just move. Do nothing and then just move. So I don't like markets that do that. I like markets that are, the whole time are giving you opportunities for entry and exits. And but nevertheless, stair-stepping higher. We have, continued support below which watch for the 159.80 support level, but it's not exactly bearish still. Could a turn be coming? Certainly, just not yet. Okay. All right, dollar yen. Lot going on this chart, so I'm going to try to take some of these things off. These 2 yellow lines are kind of where I'm more interested right now in terms of support and resistance. They are, if we step out to our 4-hour chart, they are the 2 trend lines of our off of highs. And if this is the dollar yen starting to break out of what could be a triangle pattern, this is actually kind of the price action we'd anticipate. Rally up into a trend line, hold the prior broken trend line as support, now above the other, and if you go down to a 5-minute chart, well, guess what? We're flagging basically against that level. I know there's like 10 pips here, but these are huge levels, and depending on how you draw this trend line, it could definitely vary by that much down here. So point being is, like, we're seeing it now breaking resistance, holding trend lines as support, and most importantly on the dollar yen. Again, I see this as, and I've pulled this count up before, but it's kind of one of the more a few weeks ago it was definitely one of the more ambitious counts for the triangle, because triangles do have a very large tendency to fake people out and actually be false. So let me bring this up real quick. This was the count I was referring to. We did, or I did and posted a little while ago, and it's actually continued to be my favorite count. I'm being a little going out on a limb here, but in my experience, the reason triangles are so difficult is there's a couple reasons. One is you can often have triangles in a triangle, and there's one typo here. This is a C wave triangle, not a B wave triangle inside the larger fourth wave. So it's actually this red C wave that's the triangle, but it's the same. I'm just trying to say the same thing. So if this is in fact the favorite, or the best count, and you have the A wave, B wave of your larger triangle, C wave, D, E, here's your inside triangle, A, B, C, D, E. And actually, when I have looked at RSI and momentum, this actually tends to fit pretty well. You had divergence in the A, B, C, D, and E waves of this triangle, and you actually have divergence in the A, B, C, D, and E wave of these triangles, and the D wave actually broke the divergence of this smaller triangle. So that is something that was technically significant. Obviously, we're sitting a little bit higher and above this trend line right now, which is good for this count. But one issue you have to remember is that this could all be a B wave triangle, and this could be, you know, A wave, then this is all a B wave, and then, you know, we're still resolving that triangle, or it could be, you know, a W and then an A. This is the B wave triangle, and this is an A, B, and you have a C wave up, right, and then continue downside. And kind of in what we would see as a let me get my pen out here. So this would actually be, you know, the three-wave correction up, and then, you know, of a larger A, B, and then, you know, we'd get a big C down. I have to point out that both of those could be valid as well. All right, but what does that tell us about the dollar yen in the near term? Is the fact that we're now above this trend line, and we are breaking out to the upside. Not a ton, but I mean, 100 is pretty darn good. We'll switch back over to our charts here. What we can tell is the nearest resistance, regardless of what your long-term ideologies are in this market. Nearest resistance is the 160 and the 101.50. As we approach these two levels, that's what's going to be the tell going forward. If we just shatter through these levels and we rally up into the 102s, yeah, there's still a lot that this can all be. But one thing we've been pretty certain of over the last few weeks is that regardless of what you think, if this is bullish or bearish, everything is pointing to a move into at least this area, and particularly highest probability of actually going above 101.50, and having at the very least a top somewhere in here, even if this is all corrective. Okay, there is only one count that says we head lower from right here right now before we get above 160. There are, you know, numerous other counts that point to at least this range, even if this isn't a larger triangle. And the true fourth wave triangle would take us up into this region. Okay, so we know that we have at least upside into here and here. Now, that doesn't mean we couldn't do a pullback. It doesn't mean, you know, we're not still looking from the 97, now 62 swing to highs, that we couldn't pull back into the 99 level again. No. Actually, I think that would be a very safe thing for this market to do. A pullback into this level, retest downward sloping trend lines that were broken. It's the next 50% back on a swing, and let's show you why. The last swing, the 96.57 swing to high here, we had that big day, that false move that was retraced. We held the 6-to-18 line, and we've actually hit the 110 upside targets from that trade. So now this is becoming incredibly important that we have now a swing from the 97.62 lows to highs, that if we do pull back, we don't have to, but if we do, 99 is now your support, and we don't want to see anything below a 98.50. Okay? And at the very least, we could start extensions now. And I actually want to show you this because this is what the support level we're now holding. They're valid until they fail here, But the support level we're getting at this 98.80 is actually now the prior highs that we've broken out of at 99.40 extension to highs. And that's where, to the tick, we've seen the 99.80 hold today. And we're currently just flagging sideways. So this market is actually trying to break out of the prior swing that defended 6-18 lines and has hit upside target. It's trying to do that currently. And it can do that from one of two levels. Either basically the halfway back long on the day today, or this 99.80 level, which also happens to be roughly where this broken trend line now being tested as support comes in. All right? So, you know, really, while we're above 99.60, I see us higher in the near term and continuing and probably starting to extend now and potentially going into wave threes, you know, to the upside for, you know, that push 200 pips higher, for that, you know, multiple forms of analysis on this market point to. All right, we are definitely you know, in the need for a test of this 160, and above 160 to me confirms the move above 102. Okay, very likely above 102, and it could all happen, you know, extending from here. It could. The market's telling us that, hey, I've broken out of this 99.40. Yesterday it was totally failed out on trying to on selling off. And from an hourly standpoint now, if we look at momentum on multiple time frames here, particularly the daily momentum is still climbing, and that's incredibly important. You know, for a daily chart, I have it starting to actually break kind of your upside figures for, you know, reversals, and that's actually important because that's the first confirmation of breaking out of some kind of triangle. Of course, like we said, this can head up into a width, you know, this can be more corrective still to the upside, but in the near term we at least have levels that we can identify as probable support that align with our trend lines, and everything is starting to point in certain directions. You know, before we had a prior high here that we couldn't get through. We got through it. We retested it as support. This resistance area held as support. We've gotten to move off of it. The market's been slowly talking to you and trying to tell you what it could be doing. And, you know, you just got to listen. Got to step back. You know, we knew that there was, even if this was all a correction still, we were still heading higher several hundred pips. And that's something we've been talking about for the last few days and weeks, actually. So I really wanted to give some time to dollar yen today, really look at this market, what, you know, from a technical standpoint, why we see this as, at the very least, some kind of B wave triangle, and we're getting a C leg higher now. And you know, I'll highlight what that looks like. At the very least, this is your B wave triangle, A, B, C, D, E, and then, you know, this is your leg, your A wave into the triangle, and you're getting some kind of C wave now out. Equal legs would put you actually in a flat up to the highs. Let's check that out. Fibonacci extensions here. Let's look at equal legs here. Equal legs of this triangle, and it's actually for triangles. I typically, you can draw them to either the lowest low of the triangle, or the I'm going to remove some of these trend lines so we can actually take a look at what I'm talking about in terms of a B wave triangle, because triangles can only be wave 4s, or, you know, some kind of B or C, D, or even E wave in a triangle. It's the only rule I know of that breaks it. So there's your triangle, and we're looking for that third wave out. You either draw the extension for equal legs to the lowest low of the triangle, or to the end of the E wave, which would put this flat, this expanding flat, all the way up to 105. So we could even head up to 105s and still be corrective and get a pullback all the way, you know, down to the 89 figure from there. So there is so much that's pointing to more upside in the dollar yen. Not to mention, side note, net retail has switched now short dollar yen. That usually happens at the wave 1 high, or right around wave 1 of a impulse higher. You get the reversal short, net short. In other words, retail's on the wrong side of the trade the whole way up. They're selling it the whole way up. So that's another good contrarian indicator here. But from an Elliott wave standpoint, from our, you know, just wedging standpoint, we've broken the range. We've broken our range that we slowly but surely were condensing in. And it condensed down to, I don't know if you guys remember, but when we were talking about this day right here, we talked about how it was below 97.60, we were going to head lower. Above 99.40, we're heading higher. And guess what? We're above 99.40. Okay? So the range has, what was condensing is now expanding. And right now, it's in market mode to the upside. Where's resistance? Okay? And we've broken through pretty much every resistance you can, come up with. Triangle trend lines. What do you call it? Triangle trend lines. Sorry, I want to get both these trend lines back on my chart. Either triangle trend lines, just prior highs. We're going above them, and that's technically significant to me, and I don't ignore stuff like that. Not to mention, our series of measured moves, of course, supports a higher dollar yen. Not saying, and like we said, there could be a pullback here. There's good solid support below us here at 98.90. But for right now, we're still, the market's giving itself an opportunity to continue higher from this 98.90 figure today. All right. And at the very least, somewhere, so long as we're above 99.60, I'm looking for a continued upside here. Okay. All right. Well, that about wraps that up. Last but not least, Euro Yen, absolutely beautifully. Oh no, we still have to talk about Euro Aussie too, because that's another very technical market. Daily perspective here, coming up off this 31.50 support, traded before. It was a Nexon series long, went up into new highs, retest, and now it's heading higher. Heading down to a 15-minute chart. The Euro Yen and the Euro Aussie have been pretty much identical in their trends off of their major supports. We had extension longs, breakout, began new extensions, and now we are not only have blown to and through targets of this extension, we're looking for new extensions now from the 32 or 34 anchor to high here. So our the current swing up off the 131.24s is not completed. We have 134.40 support now, well above 134.20. We're looking for continued upside, and then below that, the pullback to 133 could ensue. Okay. So yeah. Definitely still bullish on the Euro Yen in the near term. Going out to a daily, we still are inside this larger swing here. Oops, I had that swing wrong. There it is. This traditional after extensions. So that actually means that this high here, that if we get to a 137.40 target, which is our upside here, we'll actually look to begin new extensions on the Euro Yen. In other words, we'll be using this high here to highs, and I've marked it here with this purple line extension. So about the 128 figure will become a new extension, if we get up into those 137 targets. So again, market is just continuing to press higher, and we're up off resistance. Euro Aussie coming down to a daily. We've talked about this level. It's the 32 anchor to highs extension long, 41's trade. The only thing that stands in the way is the full halfway back short, right about the 145.40s. But more importantly, down to a 15-minute chart, and very similar to our Euro Yen. There was a great reversal. Market began extensions here. They traded once, twice. Same anchor, new high, traded overnight. Inside this level, we've broken the full short, and the market gave us a little micro halfway back long here today, just inside the Globex time frame. I might, retest this level, but again, continued upside to the 145.40s is expected in the Euro Aussie. But if we do roll over and head below let's call it 34 or 40 or 43.40, we're going to look for the support at the 142.70 area, which is the full halfway back long there. And this would be the first long off of the 141 lows. Another very technically significant level for the Euro Aussie in what could be a swing trade that has begun from the 141 handle to the 154s. Okay. All right, everybody, that locks everything up for us. Takes me through everything I've been watching. Again, Aussie dollar, a little bit of resistance here at the 93.35s. 10-year, huge resistance here. Continues to get a reaction off of. Dollar yen, could go either way in the near term, but ultimately we're looking for the push. Still several hundred pips higher from right here, but is the pullback going to happen before then is the question. Last but not least, I was asked to review how did I get the entry or the next entry for my S&P. Well, I'm trading extensions here, so it's a 170.25 anchor to the high prior on the day. Actually gives you the trade I took this morning that we saw plus 10 points on from entry to target was plus 10 points. We took half off at plus 2.5, no, plus 3. Anyway, same anchor, new high here is how I get my next entry. It's an extension. That's how extensions trade. So same anchor, new high, 1780 is my entry point, and my stop is below the 6218. My target is the negative 23% line. It's negative 23.6% line, which because we are in this kind of larger 4-hour or daily extension, I'm looking to basically take the trade off there if we get it. Otherwise, honestly, we could do a much larger pullback here down into the 1750s, and then I'm not even talking about the much larger pullbacks that could occur from our daily perspective. Which kind of align with those figures, but actually that's not even the level. This is the level. So much larger pullbacks if necessary, and then in case the S&P does take a major dive, we're looking for 1230 support. For 1230s would be an absolute gift from God to get long this market for the next swing up to 1900. Because that's going to happen, and we've looked at why that would happen. Okay. Yeah, if you're using the CFD for the S&P, it's the high that occurred on Monday, basically right around the U.S. Open. Okay, so the price is going to be a little different, but it's if you've got a 15-minute chart up, it's this high to high would give you the same pull mark. So. All right, everybody, that wraps everything up for me today. Your values, CFD values are typically reflective of the cash price, which is going to be different from the futures until expiration. Over the next couple of weeks, when we move into the December contract expiration, right, because I'm trading the December futures contract, the price between the S&P and the cash and the ES, the E-mini, it's usually about 7 points, 5 to 7 points. You'll see that just every day shrink a little bit until expiration, where they will be the exact same. Then the December contract will expire, and we'll go into the June contract, which is the ESM3, and this will become the front month for the S&P futures. Because right now it's December. Oh, I'm sorry, March, not June. March will become. Anyway, March will become it, and when March opens and becomes the front month, they will all of a sudden March will be at 7 to 8 points or fair value with cash, and then over time as you approach, because there's a time value of money factored into futures, as you approach expiration, they slowly get closer. And actually, an interesting quick lesson in futures. Let's look at the 6A right now, which are the Aussie futures. They're trading at which are also going to be expiring here in a week. They're trading at 93.10s, so they're still trading at, it looks like about 20 pips off of the market. And if you go back to when they come live, they're usually 50 to 70. So because the Aussie has positive carry associated with it, you get that positive carry or negative carry. You get that carry trade in the cash by a swap every day. In the futures, you don't. The futures, your price, the value of a long actually appreciates over time, because if you were to buy a long at the first day of the new contract trading, you'd be getting a price that's 70 pips, 50, 70 pips lower than the cash market, and that price that's 50 to 70 pips lower every single day is going to, you know, basically move up a pip, or the market fair value between cash and futures is going to slowly close and close and close. And that rate of closure is the exact same as what you'd be getting in your interest rate swap. Okay, well, there's fractal differences and there's ways of trading that and spreading that, but that's the basically how futures work. So anyway, have a great day, everybody. Hope you guys learned a lot. We definitely are heading into a very interesting time for the markets. You know, the markets are trying to tell the Fed what to do here. S&P rising, U.S. rates rising, U.S. dollar yen rallying. It's going to be an interesting next couple weeks. So have a great day, everybody, and we'll be back with you as price action develops.